and welcome to Sectors Up Close. I'm Elena Casas. Our focus today is on Taiwan, and my guest is Perth Tolle, the founder of Life and Liberty Indexes. Taiwan is an island nation of just 24 million people, but it plays an outsized role in manufacturing the semiconductor chips needed to make everything from mobile phones to cars. That makes it a magnet for foreign direct investment, and that has paid off for investors. This is the MSCI Taiwan Index. It's up 17% so far in 2021 and 42% last year, far outstripping the 18.6% growth for MSCI's wider emerging markets index. It's heavily weighted towards tech, with 73% of the index made up of tech firms, and 44% by market capitalization is just one company, Taiwan-Semiconductor Manufacturing. TSMC accounts for more than half of all global production of complex chips needed in smartphones and laptops. But after a global shortage of semiconductors forced car makers to halt production this spring, efforts to diversify chip production are gathering pace around the world. Potentially losing its dominance of that industry isn't the only concern for investors in Taiwan. An increasingly aggressive Chinese foreign policy and repeated Chinese intrusions into Taiwanese waters and airspace in recent months have reminded observers China considers Taiwan its own territory, a major source of contention with Washington. So, is Taiwan a good investment? Let's ask Perth Tolle, founder of Life and Liberty Indexes. Hello Perth, thanks for joining us. Let's just start by you telling us why Taiwan is a good investment.
Thanks for having me, Elena. It's a pleasure to be here. So yes, Taiwan is an interesting investment because it's kind of a microcosm of what China might have been had it been more free. With all the talk of China growth over the past, 10 to 30 years, the stock market returns have not reflected that. So as you mentioned, if you look at broad emerging markets, something like EEM, it's returned about 31% over the last 10 years. If you look at China, something like FXI, China large cap, has returned 35%. And because China makes such a huge portion of most emerging markets indexes, it's about 40% in that MSCI, in the FTSE index for their emerging markets. It does kind of drag that overall number down. Over the same time period of 10 years, Taiwan has returned 162%. Cumulatively. So it's been a very big divergence between the two. And that can be attributed, we believe, to the difference in freedom levels within these two countries. And also just in general, Taiwan is one of the freest emerging markets out there.
But as I was saying, a big part of the reason for Taiwan's economic success is down to its dominance of the semiconductor market. So is the current global shortage an opportunity for Taiwan, or is there a risk that other countries are going to come in and take up some of that market?
Yeah, so I do believe that is a huge opportunity for Taiwan. Taiwan has the most advanced semiconductor technologies in the world, and these are not something that any incoming newcomer can just pick up, quickly. So it does take some time to catch up to Taiwan. I mean, for example, China has their answer to TSMC with SMIC, and that is a company that is 5 years behind in semiconductor technologies. Also, TSMC is not the only semiconductor story in Taiwan. I mean, there's also bigger players like, other big players like Foxconn, and also lesser known ones like MediaTek. We own all three, and we believe the current shortage is an undeniable opportunity for all these companies that they are stepping up and rising to the challenge to meet.
But given that China continues to insist that Taiwan is part of China, should investors be concerned about the geopolitical risk from potential Chinese aggression?
Yeah, I mean, I think investors should be concerned about geopolitical risk from not only China, but also Russia, Saudi Arabia, and other autocracies. But as far as China and Taiwan, I think the risk of military aggression is one that would potentially affect China's market worse than Taiwan's due to instant worldwide sanctions that would be imposed, led by the United States most likely. So the real risk there for investors is China, not Taiwan. And investors who are using broad emerging market funds with 40% China allocation are likely going to have a combined 50% allocation to both China and Taiwan. They're at a much higher risk than investors in our strategy, our freedom weighted strategy with no China allocation and 20% of Taiwan. So I think investors should realize also that if they have a concern about something, yet they're in a position to direct assets, and they can affect those outcomes. So maybe don't fund autocracies with your investments and support the countries that are promoting freedom instead. And that is what will eventually change outcomes. So investors, I think, sometimes act out of fear of deviating from benchmarks instead of recognizing that we have the power to direct assets and using that power for good.
And as you were saying, your ETF focuses on investing in countries with strong human rights records. But beyond the extent of their involvement with China, of course, how do you select and assess countries?
Yeah, so the FRDM index is the world's first freedom-weighted equity strategy, and we do focus on emerging markets because in emerging markets there are just a lot of autocracies and kind of semi-autocracies, countries just coming out of autocracies. So there is that risk of non-transparent and corrupt country sets that are out there. We created our strategy for investors who value freedom and who want to stand up for those values in their emerging markets allocations. We focus there because most emerging funds have about 30% in China, additional allocations to Russia, Turkey, Saudi Arabia, and so forth. Our fund has no allocation to any of these countries, but we don't exclude any countries arbitrarily. This is just a natural result of the freedom weighting. And for data, as far as the freedom metrics, we use a data source that uses 76 different metrics on both personal and economic freedoms. And the reason why we do this is because freer countries have shown to perform more sustainably, recover faster from drawdowns, as you've seen last year, and use their human and economic capital more efficiently. So they have less capital flight and capital destruction. They're not tethered by capricious governments or murky ownership structures that benefit the few that are in power, but they have the conditions in place for wealth creation and innovation in the long run. So as freedom levels in especially emerging markets continue to diverge, we believe the freest emerging markets will be the ground zero for growth in the next decade, and that is what we're trying to capture.
Thanks so much for joining us. That was Perth Tolle, founder of Life and Liberty Indexes. Well, before I go, here are some of the top stories in this space. A Chinese government spokesperson rebuked Japan this morning after its deputy defence minister said it was necessary to, quote, wake up to Beijing's pressure on Taiwan and protect the island's democracy. China said referring to Taiwan as a country was a breach of agreements between China and Japan. Well, that comes as China beefs up its propaganda efforts and security in Beijing ahead of the 100th anniversary of the Chinese Communist Party on Thursday. The Chinese capital has shut down traffic, closed Tiananmen Square to visitors, and ramped up surveillance and security personnel numbers ahead of the centenary. A gala performance at the Olympic Stadium on Monday night told some of the history of Communist China. Darker episodes like the Cultural Revolution were left out. And Wednesday marks a year since the enactment of a sweeping but vague national security law in Hong Kong. It cracks down on what it calls subversion, secessionism, terrorism and collusion with foreign forces. It swept up journalists, entrepreneurs and even souvenir sellers. Pro-democracy tabloid Apple Daily was shut down and 5 executives arrested last week. The authorities in Hong Kong say media freedoms remain intact, but claim the newspaper published articles that violated the national security law. And that's your roundup of investing in Taiwan. I'm Elena Casas, and this is Reuters.